Welcome to the channel, where we uncover unique opportunities in the market, focusing on hard-to-borrow stocks and potential short squeezes. Today, we're diving deep into a fascinating name that recently hit our screener, Global Interactive Technologies Inc., or GITS. This isn't just a generic analysis, we're going to break down the specific details surrounding GITS and why its current metrics are turning heads. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Global Interactive Technologies Inc., trading as GITS, operates in the communication services sector, specifically within internet content and information. Through its subsidiary in South Korea, GITS is primarily known for operating and developing Filings, a digital fan engagement platform designed to support online fan communities' content discovery, sharing, and user interaction. Currently, GITS has a relatively small market cap of just $7.8 million, indicating it's a microcap stock. The estimated float, or the shares readily available for public trading, stands at around 2.4 million shares. What is cost to borrow and why it matters? So, what exactly does hard to borrow mean, and why should you care? When you short a stock, you're essentially borrowing shares, selling them, and hoping to buy them back later at a lower price to return to the lender. But borrowing isn't free. There's a fee, known as the cost to borrow, or CTB. Think of it like renting a car. If there are plenty of cars, the rental fee is low. If everyone suddenly wants to rent the same rare sports car, that daily rental fee skyrockets. The cost to borrow is expressed as an annualized percentage. When this fee gets extremely high, it signals that demand to short the stock is strong, but the supply of shares available to borrow is very, very low. Lenders demand a premium for their scarce shares. This can even exceed 100% annualized, meaning it costs more than the stock's value each year just to maintain a short position. Why this stock is hard to borrow right now? This brings us back to Global Interactive Technologies Inc. GITS recently appeared on our hard-to-borrow screener with an astonishing annualized cost-to-borrow fee of 939.4%. Show CTB number prominently, that's right, nearly 1,000%. This indicates immense demand to short GITS, coupled with an incredibly tight supply of borrowable shares. With an estimated float of only 2.4 million shares, any significant short interest can quickly make it difficult and expensive to find shares to borrow. Today's volume was extremely low at 42,000 shares, a stark contrast to its 30-day average volume of 1,428,846 shares, resulting in a relative volume of 0x average. This lack of liquidity on a given day can exacerbate borrow difficulties. Our internal composite squeeze score for GITS is 44.3, which puts it in a moderate but notable range for potential short squeeze characteristics. Squeeze mechanics explained. A short squeeze happens when a stock's price starts to rise unexpectedly, forcing short sellers to buy back shares to limit their losses. This buying pressure, often amplified by margin calls or expiring borrow agreements, drives the price even higher, causing more short sellers to cover, creating a cascade. With the cost to borrow for GITS at 939.4%, the daily cost of holding a short position is astronomical. Imagine paying nearly 2.5% of the stock's value every single day just to stay short. This kind of pressure can quickly become unsustainable, making short sellers vulnerable if the stock experiences upward momentum. The shrinking supply of borrowable shares means it's harder to initiate new short positions and expensive to maintain existing ones, setting the stage for potential forced buying. Dilution risk check. One crucial factor for any potential short squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide liquidity for short sellers to cover their positions more easily, or even take on new short positions, effectively neutralizing or negating the upward price pressure that a short squeeze relies on. For Global Interactive Technologies Inc., we've performed a check for recent dilutive SEC filings like SMINUS-1, SMINUS-3s, or 424BS in the last 90 days, and found none. This is a positive sign, as the absence of recent dilutive filings means the company isn't currently flooding the market with new shares that could undermine a squeeze. Remember, a high cost to borrow does not guarantee a short squeeze. It can also indicate that short sellers have very strong conviction that the stock's price will ultimately fall, and they are willing to pay significant fees to maintain a bearish bet. Always consider both sides. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For GITS, keep a close eye on volume. Today's volume was incredibly low at just 42,000 shares, a fraction of its 30-day average. Any significant increase in buying volume, especially on green days, could signal increased interest. The price action for GITS has been quite volatile recently, while it's down 7.2% today and 5.78% over the last 5 days. It's actually up a remarkable 51.43% over the last 30 days. This indicates recent pressure but also significant prior momentum. Watch for sustained upward price movement accompanied by increased volume, which could trigger more short covering. Also, continue to monitor the cost to borrow data and the availability of shares to borrow, as any further tightening could exacerbate the situation for short sellers. Global Interactive Technologies, Inc. GITS, with its digital fan engagement platform feigning, presents an interesting case study with its near 940% cost to borrow and small float. While the lack of recent dilution is a positive, and its 30-day performance shows strength despite recent dips, remember that high CTB alone isn't a silver bullet. It's a key ingredient, but other factors like buying pressure and market sentiment need to align for a squeeze to materialize. If you found this deep dive into GITS helpful, please smash that like button, subscribe for more unique stock insights, and let us know in the comments what other hard-to-borrow stocks you're watching.